In today's video, I'm going to be taking a deep dive look into Facebook. I'll use some different technical analysis tools and techniques to help predict where I think the price of Facebook is headed next and where the next best trade opportunity is. I'll end the video by telling you the trade I'm personally taking on Facebook. Now, real quick, just before we dive in, if you like this content, do me a favor and click the like button below and hit subscribe for future similar content. This helps out this video and my channel a ton, and I really appreciate it. So now let's get to charting Facebook. If you've seen some of my previous videos, you know the very first thing I like to do on a chart is just draw some basic support and resistance lines. These are going to be spots in Facebook's price history where we've struggled to break through many times as we're headed to the upside, and as we're coming back down, if it's a hard fall downwards and the price stops at a certain point, that's going to be known as support. So we'll look for places where this support and resistance is acting many times at the same price level, because basically we can expect that if the price comes back to this same level once again, either on the downside or the upside, we can expect the price to stall there again. Now I have this on a daily chart right here, and I have all of the price history of Facebook since it IPO'd back in May of 2012 here. Now, there are definitely a ton of different support and resistance zones all the way up through the first $100, $150, and all the way through the peak of Facebook right now. But I don't think the ones that are below, say, $100 or so are actually really that important to us right now. We're pretty far away from those price levels, so if we did start to fall downwards, we'd have plenty of time to come back to this chart and get those added in by the time we were to actually hit those levels. And because I'm a price action trader for the most part, I do use a couple different tools and techniques and sometimes throw a different indicator on my chart. But because of this, I do like to keep my chart as clean as possible. So let's just look at the price history from, say, 2016 or so, and then draw in the best support and resistance lines into here. I'm simply just going to hover my mouse over these certain areas where I'm seeing the price peak at certain spots. So for example, this little peak right in here when we got to about $135 and came back down to about $115 afterwards. This is definitely a little bit of a resistance on the way up here, and it actually hits this spot kind of twice in here. It's hard to see when zoomed out, but I'll just hover my mouse into here and then look right at this dotted line that I've drawn. So I got the vertical line where my mouse is and the horizontal line just so I can see across my chart, is this going to impact us anywhere else? And by hovering this, you can see that our dip there in early 2019 through here is actually caught by that same exact support and resistance. Now we go through this spot that I'm hovering by a little bit, but for the most part, it's catching it pretty nicely. And even furthermore, this March low right here is almost down to that support and resistance line there. We're just slightly off from it. What I'm going to do is I'm actually going to catch the bottom part of that 2019 move here. So I'm going to move my resistance line down just a little bit to this previous little wick in here. And if I zoom in, maybe you can see that a little bit better. I'm going to try and put it right on that wick right there. And then as I zoom out again, it is definitely resistance through here. And then again through this little area right in here before we continue upwards. And then like I said before, it's huge support through here. So let's do the same thing with a few other spots on this chart. Next up, I'm going to make sure I catch that March 2020 low in here. And that acts pretty nicely. I adjusted it just a little bit to catch the support through here and better catch the area in here as well. And I see yet another one kind of somewhere right in here, I would say, as this area is resistance, and then through here, and then a bit through this area, and again, a little bit through here too. Same thing right here, catches a good amount of price action through that. So far we have pretty tight levels on Facebook down into this area. So before I go forward, just if you were to think about it, if Facebook were to fall down to this $161 level, it would be very hard for it to fall below all four of these pink price levels. So if we did for some reason, and I'm not predicting this right now, this is way too soon in my chart for me to predict anything, just as an example, if we did come down to these price levels, you could start accumulating for a longer term position on Facebook, and you could buy inside of this whole box right here, knowing that at one of these pink prices, we're probably going to have a nice bounce upwards, if not a bounce upwards that continues us afterwards. So that's the basic idea behind these support and resistance lines. Let's go ahead and draw just a few more. So I see another one right in here, another one at this first peak up in here in 2018, which had our major fall after it. And then some of the more recent ones, I see one like right through here somewhere around 245, catching both of our peaks down so far. And now we're actually above price action here. So I see resistance on the way up if we come up to this $279 level. Same with about $286 in there. And then I see yet another one up close to 300, right around $298 in there. So on a daily chart, these are the levels that I like the most on Facebook so far. And I think they're going to be some of the key support and resistance levels as we continue to go forward. And many people will actually stop their charting right here. Trading doesn't have to be super difficult, and you can keep it simple. You could simply trade between these support and resistance lines. So if we were to come down to this pink line right here, you just buy at the bottom down here, and you go long, targeting that next pink line. You can put your stop loss just a bit below this pink line here, knowing that if we do fall below it and we can't come back up quickly and hold it, that we're probably going to fall down to this next pink level in here, around $218, and you wouldn't want to hold through this $27 dip. So a simple long position trade here, you could enter at the bottom right there, take a stop loss that you're comfortable with, maybe around 4% or so, $10 on the stock price, and then target that upper pink line right in here. You'd have a stop loss around 4%, a target around 12%. Your risk to reward ratio is around 3.0, which is a really solid trade. However, personally, I'm going to use a little bit more into my charting to actually get a better probability setup. As it is right now, it's hard to say whether or not this pink line will hold. It's more of just a complete guess. We've seen it hold 2 times so far, but let's use some other technical analysis to predict what we think is going to happen. Now from here, I'm actually going to short-term focus on this price action that we've had all since August 2020, because I see this as relatively sideways action in here, and I think in this sort of action, it looks like it's forming some sort of triangle, which I can use trend lines with. So I'm going to use the trend line tool here, and I'm going to try and put a trend line on this that fits best. And the very first one I see here is just to connect this high in here to this one right here. And it doesn't have to be completely perfect. If you were to zoom in, you can see that this does wick above this blue trend line by just a little bit in here, but that's totally okay. Everything doesn't have to be completely perfect. And then the next trend line I'm going to draw is actually just on the bottom here. So I'm going to start at this low right here, this little wick, and I'm going to connect it to this one right in here and just pull this sideways. So you can see we definitely are forming some sort of triangle. Of course, this one is more of like a flat line on the bottom right here, and this one is converging towards a triangular shape. This pattern right here is actually known as a descending triangle. And a descending triangle basically means that our similar lows are put in over and over. So we keep hitting the same spot on the downside. This one's slightly lower by about $1 or so, but it's definitely close enough. And the highs are getting lower and lower. So we have our first high here, our second high here, our third high here, and our fourth high here. And each of them are lower or less in price than the previous one. So lower highs and similar lows forms a descending triangle in here. And descending triangles actually have a higher probability of breaking to the downside than the upside. So if we were to continue to come to this bottom trend line right here, at some point there's a high probability that we'd break below this trend line and start to head downwards. So once again, if you just wanted to stop here and trade off of this, you could wait for us to break below this trend line on high volume. So you'd want to see volume that's higher than the previous attempts when we got to the bottom right here, which is this volume inside of here, and then this volume kind of through here. So if we were to get a good spike in volume in a red candle below this trend line right here, that would be an excellent trade to take to the downside, potentially down to this $218 price. Now, for me personally, one of my absolute favorite techniques and theories in technical analysis is known as Elliott Wave Theory. Now, I do have an entire playlist on Elliott Wave Theory, and if you want to dive more in, you can definitely go check that out. It's a 10-part series, and it's an incredibly complex theory, but in my opinion, it's the absolute best way to predict long-term movement in the market. But just to give a quick summary, Elliott Wave Theory essentially states that the market trends upwards in waves of 5 and then corrects in waves of 3. And let me just put the waves on this so you can see what I'm talking about. So it looks something like this, where we have this upward motion in this 5-wave green pattern, and then we have this corrective motion in this 3-wave white pattern, a 1, 2, 3, 4, 5, followed by an A, B, C. And you can see that even in the green upwards pattern, there are actually 2 of the waves that are corrective still. So a market can be overall bullish according to Elliott Wave Theory and according to this 5-wave pattern, but still have these downwards, or they can even be sideways patterns, more likely sideways in a 4-wave right here, as we're going upwards. Now, when I see a triangle being formed on a chart like this, triangles are most common in Elliott Wave Theory in the 4 waves. And if we just go back to that drawing, you can see that after we have a 4-wave, we have one final push upwards for the 5th wave. The only other spot that triangles can exist are actually in the B wave in our white downwards motion. So we have one push downwards, and then a B wave forms a bit of a triangle, and then we have a C wave that's actually one more push downwards. So now that we know the 2 spots, let's see how this triangle could actually be forming. So the very first thing that I see with this triangle is that we could potentially have an A, B, C, D, and we're putting in the E wave right now of the triangle. Triangles are made up of 5 wave structures, and they're labeled A, B, C, D, E like this. And after the E wave, we'd head back up in the direction like this. So I think this is kind of option number 1 on Facebook right here, is that our 3rd wave was put into this peak right here, this whole A, B, C, D, E structure, and the E might not be in yet. It might come a bit lower or a bit further to the right here. But after this A, B, C, D, E structure, this would be the end of our 4th wave, and we'd push upwards for the 5th wave. As I said, there's one more option here where this triangle is actually our B wave, and that would look something like this, where we have an A wave right here. This whole triangle that we're forming is a B wave, and then we'd come back down once more for the C wave. And once again, the triangle would be labeled similarly, where we have A, B, C, a D wave being put in, and then an E wave would be after that of this triangle. And if this were the case, then after this E wave, we'd head downwards to finish off this C right here. Now, in hindsight here, there's actually no real way to know which of these 2 things is actually going to happen. And that's just because the market never has any sort of certainty to it. You can never be 100% sure that anything's going to happen. However, let's see if we can zoom a bit out more and see, is this a 4-wave that we're in, or have we already had our 5-wave structure to here, and now this is the ABC that's forming? One thing that I will say is the fact that it's a descending triangle right now helps lead towards the point that Facebook actually might be putting in its B wave inside of this triangle right here, because the descending triangle wants to break downwards, and so maybe we'll have this B wave that finishes up here for an E wave up here, and then pushes down for the C wave to finish the ABC and to finish the descending triangle pattern. So let's zoom out and see, are we in an ABC right now, or are we in a 1, 2, 3, 4, 5? So I think this low right here is a good spot to start an Elliott wave count, because we have a good push upwards afterwards, and then a fall following it that doesn't break below these 2018 lows right here. This is actually very characteristic of a 1, 2 in the market. So that'd be a 1 to the peak here, and then a 2 down to here. Now we'd be looking for this green 3 wave, and after the 3 wave, we know that the 4 has to be a pullback or a sideways sort of movement. And what we're in right now actually helps us validate this 3, 4 pretty nicely, which would signal that we're going to go back upwards for a 5th wave afterwards. Now, typically with the 1, 2 retracement, we like to see that if we do a fib retracement pull from the bottom to the top of the 1 like this, we like to see that 2 come between this red 0.5 on this Fibonacci Retracement tool down to this yellow 0.65. This is the most common zone for a 2. However, it's not crazy to see a 2 come down to the blue 786 that I have right here, and you can see that we nearly held this level. We did end up going a bit below it, but remember that this is a huge black swan event that caused a huge dive in the market, so falling below the probability zone of retracement and even further into low probability territory is actually not that crazy for an event like this. So again, it's not our favorite 1-2 right here, but it's definitely possible, and with the rebound off of it, I definitely like the look of this. Our 3rd wave is supposed to be an aggressive wave upwards, and that's definitely what this is off of our March lows. Just through August, we went from about $135 all the way up to $300. The other thing we can do to validate the 3rd wave is use this trend-based fib extension tool. For this, I'll click at the bottom of our 1 to the top of our 1, and essentially this is just measuring the length of our 1 wave. And now we'll click at the bottom of our 2 down here and pull sideways. The most common zone for a 3rd wave is between this gold 1.618 and this green 1.75. And you can see that our 3rd wave actually falls perfectly inside of this most common zone right here. So I really like the look of this a lot as well. So now we've kind of validated this 1, 2, 3 so far. I do believe we're in some sort of fourth wave for Facebook right now. Let's dive back into that triangle and put the ABCDE in that would signify that we're actually in this fourth wave. So the first push down is our A wave of the triangle. The next push up our B wave, next push down our C wave, next push up here our D wave, and now we're just looking for that E wave to fall in. One thing to note is that each of the waves of this triangle, each of our A, B, C, D, E, are made up of an A, B, C themselves. They all have to be three-wave structures. Sometimes they're going to be more obvious than other times, but let's try and dive in and find those. I think in our A wave right here, this ABC is possible. I don't love the look of this right here because our AB is so short relative to our C. So it's also possible that our AB is somewhere down here where this price action in here is actually a B wave triangle. And if we dove into a lower time frame, maybe we could find that. But it's not too important to validate that this is a three-wave structure because we could count it like this. We could definitely count it like this. There are ways to count this where it definitely looks valid enough without diving in too much and spending too much time validating it. And similarly, our yellow B wave right here, I think this is a pretty easy count right here. All of this kind of choppy price action up to here is our A wave, our first pullback, our B wave, and then our C wave right up there. Down to our yellow C wave in here. This one, again, I think is relatively straightforward to count. Our A wave is either this low in here or this one, doesn't really matter too much. Our B wave is the first pull up, and then our C wave is the final push downwards on this yellow C right here. The D wave is the only one that's a bit tricky, especially when zoomed down on a daily chart right here. This does just look like one push upwards, so it's possible that our D wave on this actually isn't quite in yet. Maybe we actually are in the ABC of this D wave right now, so this first push up is our A, our push downwards that we have right now is our B wave, and then we're going to put in one more wave upwards later on to finish our D wave over here. And this is actually what I would like more with this. I think it makes more sense that this is only the A wave, we're down for the B right now, and we're coming up for the C wave of our yellow D wave right here. And then finally, once that yellow D is in, we can expect some sort of A, B, C downwards to finish our yellow E wave, which would finish our overall fourth wave into here. So just to summarize, I think we're probably going to come up for a D wave like this, and then come back down for another A, B, C to finish this off before we can finally push strong upwards on Facebook. I'm going to remove some of these other ABCs from my chart that I've done because we've already validated all the other waves, and let's just keep this as clean as possible. We'll also fix this upper trend line to make sure it connects to the start up here to this B wave right here, because maybe that'll help us get some guideline into where the D wave is going to fall. And at the very least, as we come up to the trend line, we can definitely expect to see some resistance with it. Now, the very last thing I'm going to do is, instead of just having this yellow arrow that I have templated, how high is Facebook actually going to go if this is what plays out, if we do get this D to finish, this E into here, and then we push upwards afterwards? In an Elliott wave triangle, we can expect the thrust upwards out of the triangle to be the same distance as the height of the tallest point of the triangle. I know that's a lot of words, so let me just show you here. I'm going to use our price range tool from the start of our yellow A, which is where our green 3 finishes. So this is our yellow A, all the way up here, and we'll pull a price range to the bottom right here where this trend line comes into play. And we're grabbing this distance right here, and you can see it's about a $61 price movement. That means that when we break out of this triangle, we can expect that the price will push $61 upwards afterwards. So let's just say we break out of the triangle over here sometime in May. We would expect the price to break out of this triangle around this $275 range, and then we could expect it to push upwards to roughly $340 in there. Now, one thing to note is that the time frame that I've drawn on this chart right here is not my prediction in any sort of way. Elliott Wave Theory doesn't really help too much with the guideline of time, so it's hard to know exactly when all of this is going to happen and when we're actually going to break out. One thing I will see is how long each of the waves have been so far. So right now the A wave has been about 26 days. The B wave was about 33 bars or 45 days. The C wave was about 70 days in here. So we're getting increasing in time right here. However, somewhere around the 30 bar range makes sense for each of the waves. And we're actually around 30 bars on our D wave right now. If we were to push back upwards to where I have it, that would be about 41 days. So it's definitely possible the D wave falls into here somewhere. And then lastly, the E wave. If the E wave was around the same amount of time, I have it drawn at roughly 36 bars into here, or 51 days, then maybe where I have it all drawn actually does make a bit of sense. This would have each of the waves relatively the same length in time. However, there's really no rule or guideline saying that's what has to happen. It's definitely possible the D wave finishes in the next week right here. And it's also possible that the E wave is only a couple days or a week long after that, and we break out instead in early April here. I would just watch for the completion of this pattern, and I would also, lastly, just watch the volume. In an Elliott wave triangle, volume is decreasing throughout the entire triangle at the peaks. So you can see that the start of our triangle is on this kind of volume peak right into here, and each of the peaks in volume afterwards are lower and lower. If we start to break above some of the other volume peaks, for example, above the volume peak into here, and then above the volume peak through here as well, that might be a sign that our triangle is actually ending sooner than we thought it might have been. So maybe this actually was the D wave, this actually is the E wave, and then maybe we're heading upwards. So all in all, this is my prediction on Facebook. I'm hoping we trend sideways for just a little bit longer in here, maybe about a month or so, a month and a half, potentially closer to 2 months. And then if we can buy down near this $245 level that's already been tested once, twice, and hopefully for a third time as support here, it's possible that we head back upwards for a 100-point move after that. So this is definitely a trade you don't want to miss if we do get this awesome opportunity. Of course, all of this technical analysis could be wrong. This could actually be a B wave as we were talking about before, and maybe we're going to break down out of this descending triangle right here. If that's the case, if we start to test this bottom trend line and we break below these C lows into here with enough volume to really give us some confidence that we're heading downwards, I'd likely take a short position on Facebook instead and target our first support in here around $218. If you made it this far in the video, it means that you probably enjoyed this content and you'd also enjoy seeing more similar content. So do me a favor and hit that like button below and hit subscribe for future similar content. Everything I post on this channel is very similar to this content, so if you like this, I think you'll like the other content too. And lastly, if you want to trade options, stocks, crypto, or basically anything with me, I do have a link to my Discord in the description below. Feel free to come check it out and trade with us. There are hundreds of traders trading together every day with multiple mentors giving their trade ideas and their trade alerts, and I think you'll just like the overall community that we have going there. And with all that being said, thank you so much for watching, and as always, good luck trading.